Sir, you can start the session now.
Now?
Yes, sir.
Okay. Good afternoon, friends. In my capacity as a regional president, NIC, of the Indo-American Chamber of Commerce, it gives me great pleasure to welcome all of you to this exciting session on the Union Budget. In particular, a very warm welcome to our chief guest, Mr. Kamlesh Chandra Varshney, Joint Secretary, Tax Policy and Legislation, Central Board of Direct Taxes. Greetings also to our session moderator, Mr. Vikas Vasal, National Managing Partner of Grant Thornton Bharat, and to our distinguished speakers and other dignitaries. Friends, it was a refreshing change that Budget 2022 was shorn of the usual populist rhetoric, doles and handouts, which we have seen in the past. This new budget is a continuum of 5 years of structural changes and reforms with emphasis on privatization of PSUs, focus on ease of doing business, augmentation of domestic manufacturing, and legislative and regulatory reforms. I will let our panel of experts dive into details and highlights of the budget. I just wanted to briefly mention that for me, one of the standout features really is the 35% increase in capital expenditure, which is projected at 7.5 lakh crores, being more than double of what was provided during the financial year 2019-20. Undoubtedly, increase in capital expenditure of this magnitude will set the stage for sustainable growth and recovery from the damage inflicted by the pandemic on the Indian economy. Increase in public spending of this scale will, of course, also be an impetus to private investments through boost in demand for manufacturing inputs and services. Overall, I would say the budget augurs well for revival of economic activity. Now, the focus will have to be on effective implementation of the budget proposals. Without further ado, I will hand over the proceedings to our session moderator, Mr. Vikas Vasal. Thank you very much.
Thank you, Rohit. Let me also add my very warm welcome to all the participants and my panel members. On behalf of IACC, special thanks to Mr. Kamlesh Varshney from Ministry of Finance for joining us today. Sir, we are all very eager to hear your perspective on some of the key announcements in the budget. And my special welcome to Mr. Thomas Carnegie as well from the US Embassy. We are keen to hear your perspective also, because you see the things and the developments in India from the other side. IACC, as we all know, is the apex bilateral chamber synergizing India-US economic engagement. We shall use today's budget platform to interact with different speakers and gain from their perspective as to what lies ahead for the two large economies in terms of the strategic business partnership. If you look at the budget announcements this time, I think there are a whole lot of announcements which create a lot of hope for the long-term growth of the economy. From the India-US perspective specifically, if we look at the announcements surrounding data centers, digitization, Kisan drones, digital universities, edutech, e-health, e-governance, and many other announcements, I think it clearly lays down the roadmap for a lot of strategic partnership for all-inclusive growth and development. So let's start the session today. I think it will be good to understand the background under which the budget was prepared and presented, and what typical questions the finance minister and her very competent team would have faced while drafting the overall budget session. If we look at the global perspective, there has been an ongoing pandemic which has caused huge disruption in terms of lives and livelihoods, healthcare systems, as well as supply chain disruption for the businesses. Inflation is at all-time high if we look at the last 1 decade or so. And to add to that, the oil prices are also rising, right now hovering around about $90 a barrel. Central banks, led by Federal Reserve in the US, are likely to tighten the monetary policy. Therefore, the time of easy availability of credit and money are likely to get shortened now. Back home in India, what was the backdrop? Economy started recovering, but then the latest wave of Omicron hit us. Many sectors are still reeling under pressure and they need some hand-holding. The commitment to bring down the fiscal deficit from 6.9% in financial year 22 to 4.5% in financial 26 has been the key guiding factor. State elections have been in sight, and last but not the least, multiple demands from multiple stakeholders. So what were the choices to be made? And definitely some very balanced and pragmatic choices have been made. First, in terms of what does the budget mean for the long-term growth? Should it adopt certain populist measures, as Rohit mentioned, or should it stick to the policy stand it has over a period of time in terms of investments, in terms of capital boostment plans, in terms of infra push? And that is exactly what we have seen in the overall budget. Clearly, the answer was increase the capital spending. Government should forefront it, followed by the private sector. And that's exactly when we see multiple increase in terms of the capital expenditure on the policy front. Should the government cut down on taxes, or should it boost investment? Clearly, a very fine balance has been made and an investment climate created both for the public sector as well as the foreign companies to invest in India, laying out a roadmap for the next 25 years as well. If we look at the fine print, predictability, consistency, and alignment with the overall policy have been clear themes. Largely, the tax rates have been maintained as status quo, barring few changes. And some of the changes have been primarily to tweaking to make it more investor friendly. For example, the surcharge has been capped at 15% on the long-term capital gains now. Whether the government should have gone ahead and announced the taxation era surrounding cryptocurrencies, or should it have waited for the final bill to be passed, because it could give an impression that we are legitimizing the cryptocurrencies through the tax announcements. The government took a bold step to provide clarity that yes, there will be a tax element, irrespective of when the bill comes and irrespective of the legitimacy of these currencies on a go-forward basis. Of course, there are a lot of questions that need to be answered surrounding that. Therefore, clearly the theme has been simplicity, consistency, and alignment. And with this, let me stop here and invite our first speaker, Mr. Raman Roy, who has been a well-wisher of the chamber. Mr. Raman Roy.
Sir, we will have Mr. Rohit Kochar first and then Mr. Raman Roy.
Okay.
Yes,
fine.
yes, please.
I have already, Kashish, I have concluded my address already.
So we'll go ahead and let me invite Mr. Raman Roy now, who is the immediate past regional president ISEC, executive council member ISEC, chairman and managing director Quattro, founder of Indian Angel Network and former chairman NASCOM, and as I mentioned, a friend of all of us and a very much well-wisher of the chamber. So Mr. Roy, over to you. We look forward to hearing your views.
Thank you, Vikas. Thank you so much. And thank you, Rohit, for having me as a part of this. I'm delighted to be among all of you to share my views. So as I will tell you, I was asked to give the views on what is the Indo-US impact, and then I went through the FM speech and I went through the fine print, and there is no direct reference. And I said, hold on, what am I being asked to talk about? And then I brought out the aspects of what the relationship between the two countries is and where we are today. So thank you for having me. I see Mr. Kamlesh Chandra Varshney has already logged on, and he will bring his perspective of participating in the making of this budget, understanding what went into it, the thinking that went into it. There are a lot of people calling this budget a budget for 25 years, the start of the next 25 years of where it can go, and what it means for us as a country and where we will be taking it. I'm sure Mr. Varshney in his presentation will throw some light on the aspects on the budget to kickstart an informed debate on the subject. I'm not talking of the newspaper columns or channels. I'm talking as a chamber that works between India and US. You will bring us some perspectives that will help us dwell down on the details of what the intention is and where we are taking this downside. As I said, while there is no direct reference to any country, and it is India's budget, so there would not be any direct reference, what I was stuck with is a realization that the budget is all about digital and IT, and how the Indo-US partnership and opportunities that are there form as a backbone of the global IT. It is not only about what we do between India and the US, but how that forms as a backbone on IT and digitization that is there globally. Let me talk a little about it in some detail. Right from the start, the Honorable Finance Minister yet again presented the budget from the tablet. I spent almost 15-20 minutes trying to figure out if I could find the make of the tablet from which she presented the budget. I could not. Or the software that ran on it, and whether it was a tablet that was made in India under the Adam Bharat scheme, or it was as yet a tablet that was made by one of the US companies which is now producing in India. As we know, Apple, which is globally the most valued company, now produces a lot of its equipment, including some of the iPads, now are made in India. I do not know whether the software that was running in the FM, and actually, you know, as a person who uses technology a lot, every time the FM touched it and moved the screen up, I was scared, what if it gets stuck? What if it doesn't move? And what will happen? Let me come to the major takeaways of the budget. I feel every new proposal has a US accent to it, be it data, the data centers, the Kisan drones, the digital university, edutech, e-health, e-passport, e-governance, and what have you. They are all about digital technologies and platforms. The US accounts for a major part of our digital technology imports, and we as India participate in creating the US digital world with the US companies and even the government. A lot of US companies are already in India, and there are some companies that are looking to come into India, especially my mind goes to, say, the semiconductor companies, and there are some budget announcements that were made by the Honorable Finance Minister that will make some of these companies relook and rethink of that. And very briefly, in my remaining 2 minutes, I'll dwell a little on that. The scaling up of private equity and venture capital investment will have US impact for it. The US is the hub of private equity and venture capital. The exits for companies and the taxation aspects of it will have an impact on the private equity world and others. The animation, visual effects, gaming and comic promotion, AVGC, again, the manufacture of gaming and some of this software and hardware is US centric. The tax holiday for startups being increased, and a lot of these startups are catering to the US market. That will create a pricing opportunity for the US market. The startups in agriculture, US depends and subsidizes a lot of its agriculture, and India is an agri economy. What we develop in agriculture will be for mutual use. Drones, Vikas referred to what will happen on the drone side, the Kisan drones, and at our Republic Day, we became the third country that had 1,000 drones doing an output, and that was an Indian startup that I had the honor to help participate in the investment in that startup as a part of Tie the Knot. And that is a totally indigenous technology of where it is growing, and again, the international opportunities there. Vikas also referred to the infrastructure status to the data centers that will play a role. SEZ centers have been playing a role for a lot of American companies as their captives. And the finance minister announced a change to replace the SEZ Act with a new law to enable the states to partner in these hubs, and that will create a huge opportunity. The digital banking by itself is a huge opportunity. I'm sure Mr. Varshney will bring out other aspects and the other thinking, but I'm excited at the opportunity that this creates, particularly on a technology front, which I can see between the two countries to collaborate and take it to the next level and set the platform for the next 25 years. With that, back to you, Vikas.
Thank you, Mr. Roy. Before I let you go, one question I would like to ask you. We have seen that policy changes now in India are not just linked to the budget day. And we see the policy changes happening. I think two clear examples. One, the government did not wait for the budget announcements for retrospective taxation. It was done during the course of the year, a great welcome change.
Absolutely.
Brought in a lot of cheer to the industry. Second was, even in terms of the procurement policy by the government, the changes were brought in during the course of the year. Similarly, we can talk about the PLI schemes and various other things which are happening. So is there any other policy change which has not been covered in the budget, but you would like to see over a course of time, maybe 1 or 2 years, which could again be a big change for India and US to collaborate?
Because you touch a raw chord at one level, but let me give you my perspective on what you said. I think the budget is the financial allocation piece, and what the government is demonstrating by what they have done by the retrospective tax being outside the budget, etc., is to say budget is not the only way to make policy statements. To the extent the policy impacts the revenues of the government or the expenditure of the government, that is covered in the budget, but it is not the policy statements. So I think that is a welcome change, and I see a lot of policy statements coming multiple times again and again of what will happen. To the second part of your question on what areas that one could have expected which have not been covered by the budget, but they were policy areas, they were not revenue areas or expenditure areas. The top among them that will impact the Indo-US relations, because a lot of US companies are sitting in SEZs. We are all working from home. I'm sure your company has a lot of people working from home. My company has 80% of the people, maybe 85 working from home. Now, when I am in the SEZ and the employee is working from home, is it allowed by the regulation? That is a clarification that is desperately needed. And we were hopeful that will come as a part of these announcements. A lot of startups, there is a taxation and that has a revenue impact to it. There is an ESOP taxation that is required to be corrected, well, my view corrected, but the law presently makes it out of pocket without there being any money in the pocket of the employee to pay those tax. That needed correction. There were certain long-term capital gains for unlisted, which are taxed at 20% for residents and 10% for non-residents. That needed to be stabilized. So there are aspects that need to be corrected, and I'm sure going forward they will be corrected.
Thank you, Mr. Roy. Correctly, I think we have titled today's session as Budget 2022 and Beyond. So I think some of the policy changes that you are recommending for SEZs, startups and others, I'm sure government will be keen to look forward to the suggestions from the chamber. And as we move along and the policy permits, changes would be made. I think the very fact that the announcement has been made that a new SEZ policy is going to be unveiled, I think we all welcome it wholeheartedly. Thank you, Mr.
Some of these changes may be incorporated in that policy. Absolutely.
Absolutely. Now, the point that you raised vis-a-vis the employees working from home, in fact, globally also in India, the hybrid working models are a reality and are likely to stay.
Absolutely.
So I'm sure this point should be considered in the new policy which is being drafted right now. Thank you very much, Mr. Roy, for sharing your perspective. Let me invite our other guest speaker, Mr. Arun Karna. Arun is the Regional Vice President, ISCC NIC, and also the Managing Director and CEO of AT&T Global Network Services. Arun, we are happy to have you, and we would love to hear your perspective.
Thank you so much, Vikas. And it was fascinating hearing the expert speakers that came before me. And the problem with that is when you come behind them, you sort of scratch your head and worry about what more can you add to the discussion. But I will try here. So Mr. Kamlesh Chandravashnik, Mr. Vikas Vasal, Mr. Thomas Carnegie, esteemed expert speakers, Mr. Shahid Khan, Ms. Shampa Bhattacharya, Mr. Aseem Chawla, Mr. Raman Roy, the ISCC leadership, ladies and gentlemen. I'm happy to join our regional president, Mr. Rohit Kochar, in welcoming you all to this discussion on the Union Budget 2022-23 proposals. Excuse me. We are assembled here primarily for two purposes. One is for dissecting the various proposals of the budget and gauging their impact on the economy and different segments of the industry. So that's number one. And number two is to suggest what more has to be done to take the budget forward to make it achieve its intended objectives. Now, it would seem that there is a broad consensus that the budget is unique in many ways. Firstly, the government has shown the courage to make the budget not a populist one, which many expected it would be, given the fact that as many as 5 states are about to go to the polls shortly. To discard the appeal of a budget that seeks to please everyone, to my mind, it's really courageous and speaks of the forthrightness of the government. Secondly, the budget is innovative on several counts, as we heard from the other esteemed speakers as well. It definitely highlights the government's intention to accelerate the growth despite disruptions caused by the pandemic. We heard from Rohit that the increase, the hike in the capital expenditure by a sharp 34 to 35%, it clearly reflects the government's priority to push for a speedy and sustainable economic development, and I quite agree on that point. I recently read somewhere a very interesting statistic that for every rupee of capital expenditure by the government, it adds about 2.5 rupees to the GDP. And that is by crowding in investments from the private sector and thus providing a multiplier effect. So if that were to come true, that would really be, something to really look forward to, I would say. Now, just as Mr. Raman Roy, I come from the technology sector, and we heard from him the whole thrust on digitalization and the move towards digital economy. And I'm also equally enthused by that. And it was heartening to see that after months of speculation around the country's stance on what would be our treatment of blockchain-based currencies, India is expected to have our own digital currency apparently in the near future, and that's extremely heartening to hear. With this move, India is expected to take another step forward in boosting the digital economy and leading to more efficient currency management as well. And as we heard from Raman as well, further encouragement has been provided to fintechs by the announcement to set up 75 digital banking units in 75 districts. Additionally, the move to bring the 150,000 post offices under the core banking system, that will accelerate the digitalization of the banking in the country and really enable the financial inclusion in many underserved areas of the country. In the healthcare arena too, the commitment towards universal access to healthcare through the rollout of the National Digital Health Mission and the National Mental Health Mission is heartening. Overall, I would say the budget lays a very strong thrust on leveraging technology as an enabler. And as a person who comes from the technology sector, that's extremely gladdening to my heart. And the various range of initiatives that would take India towards being a digital nation. There's a significant thrust on skilling as well. So not to forget the proposal to set up the digital university for access to students across the country for world-class quality universal education with personalized learning experience at their doorstep. The proposal to set up foreign universities in the gift city to offer courses in fintech, financial management, science and technology, engineering, and mathematics. Now, this will facilitate availability of high-end skilled human resources for financial services as well as technology services. And to top it all, these will be free from any domestic regulation except those imposed by Ifsc, and of course, some minimal, domestic regulation or some minimal regulation is always desirable in that sense. Moving on, in a nod to green environment and sustainability initiatives, the introduction of sovereign green bonds, I would say, is another step in the right direction, as reduction of carbon intensity takes precedence these days, and increasingly lenders are insisting on ESG compliance by borrowers. These bonds are expected to finance green infrastructure projects and tackle issues emanating from climate change. Overall, I would say the budget is seeking to catalyze the development process, particularly in the case of education, health, and inclusive growth. Now, having said all this, some of the budget proposals are obviously, they will take time to sort of get their benefits realized. They're long-term in nature, and we have to give those time. But I would say, as the finance minister herself succinctly put, the budget itself is crafted on 4 pillars that seek to deliver growth: momentum, stability, resilience, and inclusive growth. But to achieve that goal, every stakeholder will have to come forward, be it the government, the industry, private sector, public sector, the civil society, and that would set the new agenda for the country. With that, I would say I'm sure an informed debate on various proposals of the budget would take place here during the meeting, and we would be able to send a good set of post-budget proposals or suggestions to the government. So with that, Vikas, back to you.
Thank you, Arun. If I may ask a little instigative question to you and Mr. Roy again. We saw last year that the tax rates were brought down for the corporates earlier in terms of 15% for the new manufacturing. There's no doubt for the inclusive development, agri and manufacturing need specific focus, and rightly so. Most of the policy initiatives, even in this year's budget, whether it is rural upliftment, planned urban development, etc., will uplift the rural economy, and we all very much want that. So my limited question to both of you is that the concessional tax regime which has been launched for the new manufacturing, should there be a debate about a similar concessional regime for the services sector as well? We all know that services contribute maximum today to the GDP. And one thing that India is known in the outside world is its services sector, especially the IT and ITS. So my point is, is it the right appropriate time to start a debate that services should also be looked from a different perspective now?
Raman, you want to go?
So, okay, Arun, I'll go in first and then you can build on that. See, Vikas, in my opinion, fiscal and non-fiscal incentives to get us out of the impact of the pandemic is a crucial aspect of it.
Right.
And while that manufacturing tax rebate that you're talking of was specifically to bring in manufacturing, which helps create jobs and so on, so forth, I think to initiate a debate for a integrated solution, whether it is GST, whether it is, the value-added taxes, whether it is income tax, whether it is tax on the employees that we hire, whether it is a startup, because, let's take an example of UK.
Mhm.
For angel investors, if you put in 10,000 pounds, you can take 15,000 pounds as a tax deduction. Only on making the investment, not on profits. Ultimately, when you make a profit, if you took a deduction, that can get netted off. But in a scenario where we are looking to attract investment, initiating a dialogue or a debate, Vikas, as you suggested, I think is the right thing to do, to brainstorm and get all ideas on the table where fiscal and non-fiscal incentives will help kickstart and get us out of what has been the result of the pandemic.
Absolutely.
Yeah, I would tend to agree with that. I think, for the economy, there are three engines, the agriculture sector, the manufacturing and the services. And all three engines need to fire for a successful economy. So it's not services sector versus manufacturing versus agriculture. It's the integrated approach that we need to look at. And I think this budget is, directional in that sense. And I'm sure as we fine tune and take care of the other macroeconomic factors, some of those were pointed out, geopolitical risk, a possibility of oil shocks, Fed rates. I think as all those come into play as well, and the economy reacts to it, some of these forces may be unleashed in response as well. So that's my take on it. It's not, the budget itself is not the end all and be all of everything.
Absolutely. Thank you, Mr. Roy. Thank you, Arun. I think consensus is that there should be a debate in terms of what more could be done to encourage the services sector, especially the startup. And I think we are one of the few countries where the Prime Minister himself has announced a startup day, recognizing the importance of the technology and technology-enabled startups, what they are bringing in. And there's a lot of thrust in the budget, even in terms of the agri-tech startups as well, because we understand if there can be disruption brought in by startups with new technology, it could be game changer for all us. Now, let me change tracks and bring in Aseem Chawla, a dear friend who is also the Executive Council member of IACC and partner ASC Legal Solicitors and Advocates, to share his views, having heard the other panel members till now. So Aseem, over to you.
Thank you, Vikas. Always a pleasure and delight to have you amongst us. As I say, you're an officer and a gentleman, and we are equally grateful to Varshne Saab along with Mr. Thomas Carney. Let me make the most of my allotted time. Budget 2022 and beyond. So to understand beyond, let's step back for a moment. On 21st of October, we had Honorable Madam Catherine Tai, USTR representative here, and India's almost had a good truce, so to speak, if I can use that word, with regard to reaching a settlement on the USTR 301 potential sanctions in response to our unilateral equalization levy, popularly known as Google tax or DST for the non-tax audience, so to speak. And India, as per the Golden Handshake, India would continue to levy till March 31st, 2024. So if I look beyond, we have very little time. By such time, 2024, we will be in another set of elections. So I hope there is a work in progress in place, and I'm sure under the erudite leadership of Varshney Saab, this aspect is not lost sight of. Of course, it is contingent upon what happens amongst the other countries with regard to agreeing or buying in on the global minimum tax rate. But considering the fact that USTR sanctions came on us, which might make some of our exports uncompetitive. What is optimistic, Vikas, is the fact that a few statements which were exchanged with our Commerce Minister during the visit was that instead of locking horns, which makes it, quote, a tug of war or a zero-sum game, it is better to appreciate and respect each other's sensitivity and political requirements. Now, the interplay of equalization levy and the provisions of the other scheme of the Act have now seen the light of the day in getting knocked at the door. And as recent as perhaps yesterday or day before, I think Google was before the High Court, pretty much contesting this issue. So I think when you look at beyond, this is one aspect which, as a bilateral chamber, we need to see how best we could facilitate all the stakeholders and ensure that India is not slapped with the tariffs, and at the same time the trade issues be resolved within 1 year, which is what is the larger handshake photo op which we had in October and November, so to speak. Because you very eloquently spoke about the classical canons of taxation, predictability, consistency, and rationalization, which takes me back to my reading of Adam Smith. And Dr. Roy made a good reference of US impact, technology imprint, and Mr. Karna spoke about unique and courageous, if not being populist. Of course, my president also gave an address citing some numbers, but on capital expenditure. The worrying thing is the overall size of the budget has got decreased. And therefore, if there is a minute increase in capital expenditure, which we all are hailing, the revenue expenditure has gone down drastically, and areas which are affected include the most the most needed sector, which is health. And if you look at the numbers, the allocations toward health sector has gone down, and the fact that the disinvestment targets have been modestly revised to a downward lower number. Now, even with the background of tax buoyancy, and this is something which Varshney Saab has a big picture, the tax GDP ratio is expected to decline to 10.7 as compared to 10.8 this year. Now, I would assume that this is only because of a good boy trying to over deliver and under promise. Otherwise, looking at the buoyancy of the numbers of growth of 47.5% on personal tax and about 90% on corporate tax growth rate, I think this could have been a better number. But as I said, the intention may be to over deliver and under promise. All in all, what the budget does good is it does not sprung new surprises. If Vikas ka Naya Vishwas is the mantra, then I think the budget comes up with very innovative voluntary or assisting voluntary compliances is the unique concept of updating return. I think picking up what Justice Chandrachud said, that well, please figure out litigation management, the provisions with regard to repetitive appeals by virtue of following the legal information management and briefing system, which is again a web-based portal, LIMS, and something which would be a delight to Dr. Roy and Arun, that the Supreme Court itself is canvassing that please use this portal or software to its best efficiency. And I think that has been picked up as one of the proposed provisions to rejuvenate the repetitive appeal provision, which has been there but not put to much of service. Well, virtual digital asset, I think there was some reining in which had to be done to leash it. Now, whether it has been done in the right manner or it could have been done in a different point in time, I think there was some start which had to be done. The challenge I can feel, I mean, empathetically for a draftsman is when you have crypto which has shades of asset, service, currency, goods, and so on and so forth. From where do you start unwinding it? So to that extent, there is a start. The legislative drafting could be a challenge, but I think we all as part of chamber are here to assist the lawmakers in terms of an efficient drafting. And what this budget does good is the usual once two step forward, one step back, and therefore the taxpayer is left in a no man's land, devoid of certainty. So I think all in all, in my view, budget should be a non-event, frankly, except for the constitutional prerogative of the executive to do its basic housekeeping. But still, for an economy which is still developing, although I find it very amusing when we are about to become the third largest economy in the world by the end of the year, overtaking France and UK, still we are the underdogs, so to speak. I think good tax administration is still good tax policy in India. I'm glad we have Mr. Khan here, who's understandably a seasoned veteran from, again, North Block. So I would believe that good tax administration is good policy. IT is playing a very big role in this. And I really like the nudge approach where the taxman comes and just whispers in your ears and says that, look, are you missing something? And if you are, why don't you elect the option of updated return? So all in all, I mean, a good budget. Hopefully, this is the third policy announcement on medium-term fiscal policy in this tenure. I hope the government does stick to it, and if Honorable Madam Sitaraman has to be the torchlight of the Amrit Kal in showing the way for next 25 years, I think as a chamber we are all behind all of them. And with this, over to you, Vikas. Thank you for the time.
Thank you, Asim. So your message to us is that taxman knows what you did last year, whether it is the annual information system reports, or whether it is the use of tax technology by the GST authorities, or the information exchange between the GST authorities and the income tax authorities, and various other memorandums that they have signed with different countries as well as different departments also. In terms of your observation on the revenue collections go forward, I think whether it is in terms of the asset monetization or revenue collection, it's more on the realistic side or a bit conservative. So I think if the buoyancy continues, both on the GST and income tax, probably things should look better over the next year and in near future. And last but not the least, you rightly mentioned in terms of the new global tax tools linked to OECD Pillar 1 and 2 coming in, wherein India will also have to withdraw eventually the unilateral legislation that we have proposed on digital taxation and others. I think a roadmap should start now itself because time frame is little less. But also on a lighter note, it will lot depend on the US domestic tax laws as well and how they sync up with Europe vis-a-vis Pillar 1 and Pillar 2. But again, it's a move in the right direction. We will see an international tax regime which is very different from the one that we have today. In context of the overall theme, Asim, I hear from you that we are moving in the right direction. Is there anything else you would have liked to see in this year's budget, which you think is a miss?
No, I think too much experimentation is not good. We already had about 84 odd clauses in the budget. Of course, few of them are, I mean, I don't want to preempt Varshney Saab's thoughts on this, but still we end up doing too much stitching, unstitching of the tax book. So I think the lesser done is better in the given circumstances. So otherwise the wish list is long and is insatiable. But as a chamber, I I'm conscious of the fact that this 301 and the whole move, the sheer fact of Vikas, I mean, numbers do fancy us. The equalization levy collections have improved or jumped about 100% from a year-to-year basis.
Yeah.
And if you compare the past year with the year preceding, they've jumped about 81%. So the temptation of withdrawal of taxes, cesses and surcharges are introduced for a purpose and they become permanent. I'm not getting into the debate of state versus center, and cesses are the prerogative of the center. But how the tapering off will happen of equalization levy, with maybe by next year, if you think another jump of 50%, then you're talking about 2,000 odd crores of collections on equalization levy. Let's not forget the stock market has given STT about 15,000 crores, and we've already surpassed our targets. So how do you withdraw that is sort of thing. So I think there should be a roadmap on this. And I really wish, I mean, now that you pressed a litigator or cornered a litigator, I would say the whole overlap of EL vis-a-vis the other provisions of the Act and avoiding again litigation, because the tendency in the last 6 months, I can tell you firsthand as a tax litigator, is that there has been more propensity of the taxpayer knocking the door of the High Court than ever before in the last so many years. So that's something which if we could avoid with a better litigation management system, I think that would subserve the real purpose of society.
Sure, Asim. So the point is, while equalization levy collections are going up, see if some clarity is provided on some of the essential terminologies over there.
Yeah.
Maybe in the form of FAQs, because what constitutes an online platform, and because the definitions are quite wide enough to cover any kind of transactions over there right now. So some clarity will help avoid any disputes and litigation go forward. But overall, we are moving in the right direction. Thanks, Asim. Let me change track. We have been hearing from one side of the table till now. Let me invite Mr. Thomas Carnegie, who is the Deputy Minister Counselor for Economic, Environment, Science and Technology Affairs from US Embassy, to hear his perspective as to how he sees the budget and the various policy changes that have happened in the recent past, and what more can be done to bring in the US-India collaboration even more closer and more successful. Mr. Thomas, over to you.
Thank you. A big thank you to the Indo-American Chamber of Commerce for organizing this post-budget session, to all the speakers, to Mr. Vikas Vissal for moderating the discussion, and of course, everyone who's attending today. I'm going to start off with a broad perspective and then kind of bring it down to the look at the budget. Today, the simple fact is our people and our countries are closer now than at any previous point in history. The US-India relationship has benefited our countries in nearly every sector, from science and space, to new and emerging technologies, to protecting against cybercrime, to combating climate change, to finding sources of clean energy, and to protecting our oceans and expanding trade. There is no area of human endeavor where we are not working together. And we can see this by the priority that the administration has put on India. Since the start of the administration, President Biden and Prime Minister Modi have met in person and convened a leader-level Quad meeting in September after an earlier meeting, virtual one, earlier in the year. As was mentioned, United States Trade Representative Tai visited and resumed discussions with Commerce Minister Goyal under the Trade Policy Forum. We have our Energy Secretary Granholm and Minister of Petroleum and Natural Gas launching the revamped Strategic Clean Energy Partnership to prioritize cooperation in line with our mutual clean energy and climate goals. Special Presidential Envoy for Climate John Kerry has visited twice already. Treasury Secretary Yellen met with her counterpart, Minister Sitharaman, in Washington under the 8th meeting of the US-India Economic and Financial Partnership. And we were visited by both Secretary of State Blinken in July and Secretary of Defense Austin, who made his first overseas trip that included India in March. And the pace of this engagement reflects that India and the United States are the two world's largest democracies and some of the largest economies. And we share responsibility to protect and provide the prosperity, security, and stability to our own citizens and the world in the region that has undergrid our growth to this point. We were therefore very encouraged by the budget this year that included a focus on digital solutions, improving infrastructure, increasing investment, fostering inclusive development, and enhancing productivity. Those priorities match very closely with our shared vision for the region. And it can be seen by some of the work we're already doing through the Quad in our Critical and Emerging Technologies Working Group, in our Infrastructure Working Group, and of course, we've seen some success on addressing climate change. That was at COP19, we could see, and the availability of COVID-19 vaccines through the Quad Vaccine Partnership. We look to continue this trend, this positive trend in trade and investment that we've experienced over the past 2 decades. For those who are tracking, bilateral trade in goods and services surged from $20.7 billion in 2001 to over $146.1 billion in 2019. There was a slight dip in 2020, as I think was to be expected. But in 2021, we've already seen the numbers that only run up through November have exceeded the 2019 numbers. So 2021 will be a record-breaking year, and we expect that will continue. As you all know, everyone in this room knows, the United States has become the largest trading partner of India. Most of major US firms have significant investments and operations in India. And in the United States has become India's largest source of foreign direct investment. And encouragingly, a large number of Indian companies have similarly found the United States to be a welcoming destination for trade and investment. But I think, as we all also know, the economic relationship still has a lot of room to grow to reach its full potential. And as was mentioned, we welcome the reconvening of the US-India Trade Policy Forum in November, focused on issues including agricultural market access, labor, the environment, good regulatory practices, digital trade, and standards. It was a very positive meeting, very collegial discussion, and both Minister of Commerce Goyal and his counterpart, United States Trade Representative Tai, agreed that we will convene working groups over the next few months to sustain the momentum and aim to hold a second ministerial at the end of 2022. I hope a lot of you got to join in this year in October when India co-hosted with the United States the 2021 Indo-Pacific Business Forum that brought together 2,300 businesses and government leaders to discuss economic engagement. And it highlighted nearly $7 billion in new private sector projects. That was the first time the forum was ever held outside of East Asia or the United States, and it really demonstrated the key role that India plays in the region. As I mentioned, we have on energy, President Biden and Prime Minister Modi launched the US-India Climate and Clean Energy Agenda 2030 Partnership. On climate change, our Special Presidential Envoy for Climate, John Kerry, and Minister for Environment, Forest, and Climate Change, Yadav, launched the Climate Action and Finance Mobilization Dialogue to create new platforms for bilateral cooperation on climate ambition, finance, and adaptation. We are proud the United States could join the International Solar Alliance as led by India. And in March, we will be co-chairing with India the Coalition for Disaster Resilient Infrastructure. On vaccines, I think I just mentioned the Quad Vaccine Partnership. U.S. International Development Finance Corporation, or DFC, was able to provide a $50 million investment to help Biological E expand their production to reach the goal of making 1 billion vaccines for the Indo-Pacific region by the end of this year. So it's clear from all that we're doing together that the United States and India share this common vision for the region, one that is free, open, secure, and prosperous. And the success of our countries are based on our joint work in this area. And as we look forward, I don't know if you've seen in the press, but we're developing a comprehensive Indo-Pacific economic framework that will help us pursue our shared objectives with like-minded partners, including trade facilitation, the digital economy and technology, resilient supply chains, decarbonization and climate energy, infrastructure, and worker standards. As was pointed out just from the discussion today on the budget, India is already working in many of these areas and has the goal of joining global and regional supply chains, investing in its infrastructure, enacting economic reforms that will improve India's business and investment environment. And we know just from our experience over the past 2 years that when we work together, we not only deliver for our people, but we do so for the region and the world. So I appreciate you giving me this opportunity to share a view of the US-India relationship. And I thank you all for gathering today and sharing your perspectives of where you think India is headed in the year ahead, as reflected in the budget.
Thank you, Thomas. I think what you clearly highlighted was that there's increased interaction at the government level and at various levels in the government right now. And generally, there's a positive fallout of that. That is, there is increased business which follows after that. It's very heartening to see the things which are developing on the Indo-Pacific and other platforms. We all look forward that the two democracies join hands on various initiatives. So one question for you, Thomas, is there any ask that you would like to have for us as a business chamber to take to the government as things progress further?
Well, I think some of the things that you said today, obviously the implementation, making sure that the regulations are fair and open. One thing we haven't touched upon, of course, is a lot of the work in the digital space, the Personal Data Protection Bill, which is now the Data Protection Bill, making sure that information can flow freely, which everyone in this room probably knows is why both of our countries have had so successful ICT sectors. So as new regulations get created, that they reflect that free flow of information. And yes, we all need to protect our citizens. We all need to protect our data, and we're all working to find ways to do that, but we should be doing it together in a way that fosters innovation and growth, not creating standalone silos that then make it harder for companies to operate and share information, and could restrict some of that growth that we've seen over the years.
Thank you very much, Thomas, for joining us today and sharing your perspective. Let me add one more angle to the collaboration aspect that you mentioned. Today, some of the largest US IT companies are being led or headed by ex-Indians. So I think that's also a great way of collaboration where both the countries are progressing further through the business as well. Thank you very much for joining us today.
I was going to add, I'm not sure it's that the government leads business. I think it's more that business and people to people lead the government. And so
both are supportive of each other.
That's right.
Great. And that's what leads us to the inclusive development.
That's right. And we've seen that in a number of sectors. And so we're very proud of the people to people ties and the business ties, and that the US companies are investing in large ways here across the board for sustainable development. And we hope that'll just continue.
No, absolutely. Absolutely. We fully concur with you. And once again, sir, thank you very much for joining us today.
My pleasure.
So it's been over a week, friends, when the budget was presented. Let's refresh our memories in terms of what was there in the fine print. Let me invite Mr. Shahid Khan and Shampa Bhattacharya to share their perspective. Mr. Shahid Khan is the former member, Central Board of Direct Taxes, and brings in rich experience and perspective from both sides of the table. And currently he's a senior partner and heads direct tax practice at Kocher & Company. And Shampa Bhattacharya, who will cover the indirect taxes side, is a partner with Kocher & Company. So Mr. Khan, sir, over to you.
Thank you. Thank you, Vikas. Let me start with a general comment that it is not often that a finance minister gets the opportunity to frame tax proposals with a booming revenue. Now, if you see the collections, both a budget estimate and the revised estimate, the budget estimate for this year was 11 lakh odd crores, and it has been revised to 12.5 lakh crore for the current year. And next year it is going to be 14.5 lakh crore. That's a huge increase and proposal for collections. In that background, framing tax proposals become rather, or should I say, somewhat easy. Now, I need to compliment the tax department and the government, particularly on this part of it. The jury is still out as to what all has gone in making these substantial increases in the collections. But one possibility and probability is that all the effort that has gone for last decade or so in setting up tax databases and making sure that the different databases talk to each other and all that goes into framing of assessments and making tax demands has also a substantial contribution in it. And I'm sure as the years progress and these databases mature, the systems will give better results on this. Now, it is obvious that a tax system has to provide certainty and stability. And this year's particularly, the tax rates have remained unchanged. The headline tax rates have remained unchanged. Only minor change has been there in the surtax on long-term capital gains, which has been capped at 15%. Can we have the next slide, please, Kashish? So headline tax rates have remained unchanged. Only thing that has happened is that surcharge on long-term capital gains has been capped. This is in the fine prints, but if you really look at it, it gives a substantial tax benefit to people having unlisted securities, because the net tax rate or the effective tax rate on long-term capital gains on unlisted securities for gains exceeding 2 crore goes down to 23.92% effectively. Now that's a benefit of something like 4% of the total tax effect, and it's going to benefit the startup community, particularly the angel investors, the ESOP holders, and all those people who have unlisted shares and propose to earn capital gain on that. The other changes are only actually continuation, or rather extension of certain benefits which were already granted and which could not be fully utilized due to the pandemic years. So therefore, you have the concessional tax rate for new manufacturing units being extended by another year to 31st March 2024. Similarly, the eligibility period for startup companies have also been extended by 1 year. So these are really the most welcome changes which will benefit particular sectors. Now, this question about whether this benefit of 15% concessional rate should have been also extended to service sector is something which has been debated, which some people also expected, but which has not come out. My take on this is that in a year of booming revenues, that's something which could have been touched upon by the Honorable Minister, but then we can hope for better position in the years to come. One particular change on the negative side is that the concessional tax rate on dividend income of foreign dividend income of Indian companies, which was there for the last couple of years, has been withdrawn, and this will be the dividend income of such companies will be now taxable at the normal rates. If we move over to the main change in the finance bill for this year, which is the virtual digital assets, which has been something which has been talked about the most in the press and in the discussions on channels and so on, is taxation of cryptocurrencies. Can we move to the next slide, please, Kashish? Now, virtual digital assets is a new term which has been coined in the finance bill and which probably will now gain currency for all legislation on this subject. The term VDA has been defined in the most comprehensive manner. I mean, it's a sweeping definition which takes into its ambit all kinds of cryptographic tokens or numbers or codes which have some value. And this includes non-fungible tokens also. Only thing that has been left out of the definition is currencies. Digital currency is only something which is out of the definition of VDA. Otherwise, the definition is long and very, very wide. And I guess, I mean, I can very well guess that the definition will involve some litigation as the days progress. Tax rate of 30% on income from VDAs is probably what was coming. I mean, I see no reason why there should have been a tax rate lower than the normal tax rate on personal incomes. So therefore, that part, to my mind, appears all right. The provision that there will be no expenditure will be allowed against this income other than cost of acquisition, that also makes sense. The difficulty probably is on the provision that no losses will be allowed. Now, those provisions have been defined in such a wide manner, and I believe Mr. Varshney will have something to give us on by way of explanation on this subject. The term losses have been defined in such a manner that not only losses from trading in VDAs will not be adjusted against other income from other sources or other heads, but it is also doubtful whether losses from same class of VDS or different classes of VDS can be adjusted against income of the current year itself. Now that appears to be pretty wide, or I mean, if that interpretation is accepted, it will mean that only the income in each transaction will be taxed, but losses in transactions will not be allowed. I don't think that's a very fair proposition as far as taxation of this particular source is concerned. I believe Mr. Varshney will be able to explain this for our audience in a better way than I can. Then the other issue, which is again inviting a lot of discussion, is the provision relating to TDS. The law has provided that TDS of 1% will be deducted by the purchasers from amounts paid to resident Indians on transactions relating to VDS. Now, this of course has its own problems relating to as to how do you identify persons trading on foreign exchanges, and how do you identify their particular PAN numbers, and etc. etc. Now, I suppose a lot of clarifications will come on these issues as we go by. So that's an area which has invited a lot of discussion, and which probably will see things happening in the year current year also, in the years to come. Moving over to next slide, please, Kashish. On the business income side, I think there are not many changes, except that there is an effort to plug some of adverse decisions which had come from courts over the last year or so. So that's nothing to really discuss too much about. And then there are two very welcome minor amendments, but welcome amendments. One relates to this question that cases of IBC cases, the assessing officers will be able to modify the tax demands in accordance with orders passed by the adjudicating authorities. And the other relates to business organizations. Moving over to the next broad head, can we have the next slide, please, Kashish? These tax incentives for units in Ifsc. Now, there is already a clutch of tax benefits which are available for units functioning from international financial service centers, that is GIFT City, Gandhinagar. This particular bill proposes certain more exemptions for non-residents who are operating from IFSCs. Now, I hope that these will be well received by the non-resident investor community and by foreign portfolio investors, and this will help bring the FDI part of the story also. Now, these basically relate to income from transfer for offshore derivative incentives with offshore banking units in IFSC, and royalty and interest on leases of ships, etc. Last point that I need to touch in the short time that I have. Kashish, can I have the next slide, please? Related to TDS and this faceless assessment scheme. Now, TDS on transfer removable property was already there. TDS of 100% was required to be deducted on transfer consideration by the purchasers. What the finance bill now does is that it will be deducted on stamp duty value or transfer consideration, whichever is higher. Now, this can pose little difficulty in cases, in two types of cases. First of all, the substantive taxation provision provides a tolerance limit of 10% from stamp duty value, which is not there in the TDS provision. So therefore, if the transfer consideration is less than 10% of the stamp duty value, will the TDS be made at the stamp duty value itself or at the transfer consideration? That's a question that needs clarification. Similarly, the question where transfer consideration is paid in installments or in advance and in subsequent installments, will the TDS be deducted at stamp duty at the first point itself? That again needs clarification, and we hope Mr. Varshney will be able to help us on that count. this subject of updated tax returns was mentioned earlier, and this is again a very welcome change. Now, this provides that in cases where some income has remained to be disclosed in the regular return, it will be possible for a taxpayer to update his return by paying extra tax, by paying additional tax up to 25% or 50% within the next 24 months. Now, this, of course, takes out a number of categories such as search and seizure cases where assessments are pending, and so on. So my suggestion would be that cases where assessments are pending should not be taken out from this purview completely. It should be possible if this scheme is to succeed, it should be possible for people who are facing pending assessments to update their returns and pay additional tax. The other point that needs clarification in this is that there is no provision relating to what will happen to the consignment penalties in reference to returns which have been updated. So those are again two issues which probably need a clarification from the board. And faceless assessment scheme again has received a very welcome change where personal hearing can be asked and has to be given mandatorily. So those are again very, very welcome changes. Overall, I mean, I would say that the board and the government has maintained stability and continuity, and has by and large attended to the difficulties that the taxpayers are facing, particularly in respect to faceless assessment scheme. Thank you. Thank you, Usha. Thank you, Vikas. Over to you.
Thank you, Mr. Khan. Let's quickly move to the indirect taxes. Shampa, can you take us to the indirect tax provisions?
Yeah. Good evening, everybody. I think we're really pressed for time, so I'll actually quickly go into the major points so that we can have enough time for the discussion later. So let's start with the customs. It seems that the proposals that have been suggested this time is very welcome by the taxpayers, because it's been beneficial for the the taxpayers from a customs and GST's perspective, because of the procedural and the compliance changes which have been suggested and are planned to be implemented. So the custom duty rationalization aligned to Make in India and make a Atmanirbhar Bharat policy is the key this time, again like the last year budget. So around 350 custom duty exemptions have been withdrawn, and more than 40 exemptions related to capital goods and project imports to be gradually phased out. This would of course lead to a boost to the domestic manufacturing here and making India Atmanirbhar Bharat. The customs tariff structure is simplified now by moving all the unconditional concessional rates from existing exemption notifications to first schedule of the Customs Tariff Act. A major change that we have seen, there's a pending case of the Supreme Court of the canon judgment, where whether officers of DRI, audit and preventive formation were included as officers who could actually issue show cause notices. So there has been an amendment in the definition of proper officers to validate actions taken by them. As part of the custom duty rates, there has been a lot of exemptions which have been gradually will be phased out, but also certain sunset clause exemptions which were introduced last year in the budget would not apply for, certain kind of other advance authorization or ITA concession or the PMP, that is the production manufacturing policy. They still continue to get the exemption dates. That sunset date would not be applicable to them. So we've already gone through the DRI and the officers of DRI. So in specifying the conditions and limitations on officers of customs to exercise powers under the Customs Act, they would include territorial jurisdictions, person or class of persons, goods or class of goods, cases or class of cases, computer assigned random assignment, any other criteria as CBIC may specify by notification. So it's not a tight jacket compartment which has been now, decided by. So further, 2 or more officers of customs can concurrently exercise powers and function assigned. So this has been actually a move where the department has been given wider powers to even carry on faceless assessments and identify issues and show cause notices to the taxpayers, which in fact gives a little bit of, lesser ambiguity, which was actually there in the tax pays. So when I say from a customs procedure point, so the IGCR rules will be revised from 1st March 2020 to make entire process digital and transparent. The key highlights would be all the necessary details are to be required to be submitted electronically. The need for any transaction-based permission and intimations are being done away with. So it would be more of a automated system in the entire process, which would be going on. A major change which would be seen is in the SEZ proposal, where the SEZ Act would be replaced by a new legislation to enable states to become partners in development of enterprise and service hubs, which would be in line with the customs administration and would be a more digitalized way of operating. Coming down to GST, from a GST perspective, of course, the major changes that we look is from an input tax credit point of view. So the existing procedure of a two-way communication where ITC had to be taken between the supplier and the recipient for ITC has been done away with. There'll be a self-assessment way of taking the ITC, and that will actually also cause an issue where the recipient who is taking the ITC has to keep a tab on the supplier where the supplier has actually paid the GST or not, which would actually obligate him to always keep a check on him, because that may not, now it's not a matching concept, which is now done away with. Also, taxpayer will be able to avail ITC on self-assessment. If the tax is not paid by the supplier, the recipient who's going to take the ITC has to reverse the credit and pay applicable interest also. At present, there are certain time limits to avail ITC and other return filing, or for that matter, credit notes, where the dates have been extended from September 30th till November 30th. Non-resident taxable person shall furnish the monthly return by 13th of the next month. SSC will have to pay self-assessed tax, or in lieu of self-assessed tax, an amount to be determined in the manner as may be prescribed. The government is empowered to prescribe the maximum proportion of output tax liability which can be paid by utilizing credit. In terms of refund, a specialized agency of the United Nations organization or other specified persons can make the refund application up to 2 years from the last date of quarter in each of the supply that was to be received. Also, from an excise perspective, there has been an increase in the rate of branded petrol and diesel, which are not blended. That is to basically increase, blending of the motor spirits here. So if I look into the wrap up of, indirect tax changes that have been suggested by our finance minister, it seems a win-win situation from procedural aspect, giving more clarity as to how a taxpayer SSC can comply in terms of its compliances, and also in terms of its litigations, how are the issues to be sorted out. And of course, we look at the major change which is awaited with the SEZ. So that's all from the indirect tax side that I have. I'm sorry we could not use the PPT regularly because we were really pressed on the time.
No, thank you very much, Shampa. And thank you, Mr. Khan, for taking us lucidly through the fine print in the tax provisions. It's not an easy job, and both of you have done it very well. Therefore, if consistency was a theme in the direct tax proposals, I think simplification and rationalization was the underlying theme in customs, and bringing in checks and balances and alignment with the overall policy framework was a theme under the GST. So these are the broad structures that we had in the fine print. Once again, very lucidly done. Thank you, Mr. Khan and Shampa. Friends, I do not know about you, but often I struggle in terms of managing my own household budget. With 6 people, 3 generations under one roof, it's never an easy ask. And often there are certain priorities which we have to struggle with. Managing our budget for 1.4 billion population, and which is as diverse as India, being a democracy, wherein there are different demands from different stakeholders, all very legitimate, all very asking and pressing, especially in a time when the ongoing pandemic has been there, which has disrupted lives and livelihoods across the length and breadth of the country. Presenting a rational, pragmatic budget first listening to all the stakeholders, including business chambers like ours, and then keeping an eye on the overall growth and development for the future, and presenting a budget like this definitely deserve kudos and congratulations to the Honorable Finance Minister, Mr. Kamlesh Varshney, and the entire team at North Block. Now we have the privilege of inviting Mr. Kamlesh Varshney. Sir, thank you very much for joining us. And a brief introduction, Mr. Kamlesh Varshney is an IRS officer, currently Joint Secretary, Taxation Policy and Legislation at Central Board of Direct Taxes, Department of Revenue, Ministry of Finance. And one more great thing which I must share with our viewers today is he is always available and very patient listener to what all we say. And we often find some of those changes coming either in the budget or later on in the policy. So thank you, sir. We are privileged to have you with us. Over to you, sir.
Thank you. Thank you so much, Vikas. And it's really a privilege to be here speaking for Indo-American Chamber of Commerce. And really fortunate to hear the views of Vikas, Mr. Rohit, Mr. Raman, Mr. Arun, Mr. Asim, Mr. Thomas, Khan sir, Shampa, and Khan sir, just to give you a background, when we get selected into Indian Revenue Service, we have to undergo training at Nagpur at the National Academy of Direct Taxes. And when I was selected in IRS and was undergoing training there, Khan sir was our mentor. So always a special occasion to hear from him. Coming to this, budget, we have already heard from other speakers that the theme of this budget has been the stability in tax regime. And that has been the theme not only for the last few years, but since 2014. In fact, late Arun Jaitley ji, when he was a finance minister of India, he announced in 2015 that we have to move to a tax regime which does not have too many concessions and exemptions and has a lower tax rates. And that is necessary because all these exemptions and deductions lead to unnecessary tax competition, tax leakage, and also litigation, because how you interpret a particular tax exemption is never free from doubt. So that path was undertaken at that point of time. And then, slowly exemptions and deductions were removed. And in 2019, this government reduced the corporate tax rate to 22% and 15%. Now, a very valid question was asked whether this, Mr. Vikas has asked this question, that whether this could be also for services sector. Of course, I mean, these are the issues which can always be debated. But the practical aspect is that 22% tax rate has been provided to all, whether you are a service sector or whether you are manufacturing sector. 15% is a special tax rate, which was to attract new manufacturing unit in India from overseas locations. And that was for creating new jobs, for giving impetus to our growth due to foreign investment. The question is, do we require that kind of investment in services sector, number one? And number two is, how do you know whether it is a new service sector or it is existing service sector reorganized as new service sector? If you, in the case of manufacturing, we have certain yardstick. We can examine whether it is not split up from the existing manufacturing unit, or plant and machinery, which is the basic essential ingredient for manufacturing, are new. They are not the old ones. So those are the items we can verify, probably whether in services sector that can be done or not, whether foreign investment is needed for services sector, because services sector is more depends on human manpower rather than on investment. No, these are the items. These are the areas which needs to be addressed when we discuss this issue, whether the 15% tax rate is to be extended to services sector. So that coming back to the main topic, the direction which was there, that 2019 corporate tax rates were reduced, and that led to fall in tax GDP ratio, which was expected. Immediately when you reduce tax rates, there is going to be loss in direct tax revenue. But the idea was that this temporarily loss in tax revenue will result in higher tax gain, more economic activity, more job opportunities in a long run. And that is what we are seeing now. Probably, one can say that that expectation has been delayed because of COVID, the manufacturing unit also need time to construct the plant and employ people. So it was just a bad luck. You can say that COVID happened immediately after this particular tax reform. So to some extent, what we expected after a few 1 or 2 years may take some more time to realize. And what you are seeing today is actually, that huge buoyancy that you are seeing, which Khan sir or other speakers also referred to, that we will have to see what is the reason for this increased tax rate. I think one of the reason is that that probably now we are reaping the fruits of corporate tax reduction and other administrative reforms which have been undertaken over a few years. So if you see, this year tax collection is 34% higher than last year. But I fully understand, you can immediately put a question that last year is not a good comparison. It was not a good base because that was a COVID year. And COVID impacted year where for the first 3 months, there was no economic activity in the country. So that's not a good comparison. Fully agree with you. But if we compare with the financial year 1920, even then there is a rise of 19% in direct tax rates, 19%, which is also a very good buoyancy. And next year target is 13.6%. That is also a very good expectation. And probably we might have more than 13.6%. What Asim referred to, that tax to GDP ratio this year is 10.9 and projected is 10.8. That slight fall may be because of reduction in excise duty that is envisaged. But otherwise, the buoyancy in direct tax and both indirect tax is a very, very good buoyancy we are having. You see GST collection, the way it is zooming up. So what we are expecting is that probably next year, although the budgeted estimate is 10.8% of GDP, but our expectation is that probably next year when finance minister presents the budget, just like this year, she will also revise the budget target upwards. So probably we are now, because of the tax reforms, the policy of reducing corporate tax rate and other administrative reform that have been undertaken, the direction is that ultimately our tax to GDP ratio will cross 11% and achieve the highest rate that we have ever achieved in our history, and then move forward from there. So when Mr. Raman was saying that laying the foundation for future growth, so basically this is the foundation which is being laid, which is the platform which has been built. From there, we just have to rise higher and higher. So while we are talking about reduction in tax rate, there are other administrative reforms which have been undertaken by the government, which signifies the trust between taxpayer and tax department. Like earlier, whatever information we used to collect about the taxpayer, we did not use to confront it to the taxpayer, and we expected him to be honest and file his tax return correctly. But now what Asim referred to, that he liked that buzz approach, kind of a whisper in the ear of taxpayer that we have this information about you. So that is a trust that has been built now. Now we, when you go and file your tax return, you log into your account, you can see the information, what interest income you have earned in various accounts, including saving bank interest, what dividend you have received, what capital gain you have earned, what share you bought, what shares you sold. So those informations are there which can help you to file your tax return correctly. But then we keep on receiving information subsequently as well. And that also we have come out with an e-verification scheme. So that e-verification scheme, under e-verification scheme, we will again confront you the information. We will still not issue you notice for reassessment. We will tell you that this is the information you have. And now what is proposed in the budget is a provision to update your return. Because by this time you have already filed your return. Time to revise return has also gone. So now when we confront you some more information which has come to our knowledge later on, then, for example, your credit card expenses, your foreign travel, or your asset, some other asset purchase, immovable property, selling, whatever. So those information, then probably you can explain it to us under e-verification scheme, or you can update your return if you feel that the correct amount was not reflected in the return. So once again, this is a taxpayer-friendly measure to promote voluntary compliance. That means we are encouraging you to come out clean on your own rather than we issue you notice and starting the litigation. Asim referred to that last 6 months have seen the litigation like never before. Once again, it was because of that reassessment, and probably something which was very genuine, natural justice, that video conferences should be provided to all. So which is well accepted. And 148, because unusual situation, because of COVID, date was extended. So that was an unusual situation which gave rise to so many litigations. But otherwise, the effort have been to reduce litigation. Now, if you are coming out clean on your own without us issuing notices, so that is the best thing possible for you as well as for the department and for the government of India. No litigation, and the tax has been paid correctly. Some people would still be left out. Now, with the resources that department has, department can more effectively chase those people who are left out. So that has been the thinking behind this new provision of updated return to encourage voluntary compliance, to take the administrative reform which have been initiated to a higher level. So while we are doing this, we are also mindful of the fact that we have to also reduce litigation. So another initiative that has been undertaken is the department will not file appeal in cases where similar question of law is pending in jurisdictional high court or in Supreme Court, even in other case, not only in the case of the assessee, but in any case. So that's a very positive step. Ultimately, idea is that how can we reduce litigation? Department in the past have come out with a circular that if the tax effect is this much amount, then appeal should not be filed. That's not a very effective way of curtailing litigation, because some genuine cases don't get filed in this. That was a step in the right direction, but probably this is a better step. That if something is pending in High Court or Supreme Court, then probably you don't file appeal to ITAT and High Court, and you don't file in the sense you defer it unless you get a favorable order. Department interest is protected, because if a department gets a favorable order sometime in future, at that point of time, department can file the appeal. So those enabling provisions have been made, and this we do expect that this will reduce litigation to quite an extent. But we will still have to see how it is implemented and how successful it is. And then we have provided clarity in law on various provisions where probably the court decisions were not in line with the intention of the legislation. Shahid Khan sir have covered that in his presentation. I don't want to repeat them. That have already been beautifully covered there. Just one thing I want to mention in addition: the trust provision is something that once again they might have taken a lot of pages of explanatory memorandum, but there is a definite intention to remove ambiguity in implementation of trust exemption regime. So we have two regime here. So idea is why should there be difference in the two regime? Why can't they be brought at par with each other so that both are at equal footing? So an attempt has been made in that direction. Then more than that, once again, to reduce litigation and clarity is provided. Right now, there are many conditions that trust must fulfill: number 1, number 2, 3, 4, 5, 6, 7, 8. But it is not known if he violates these conditions, then what action assessing officer should take. Some of those conditions are minor in nature. Some of those conditions are major, having substantial impact. So will the reaction of the assessing officer be same, whether it is a minor violation or a major violation? So all that has been proposed to, that has been clarified through the proposal in this budget, that if this is the violation, then this is what assessing officer will do. And if some other violation, some other step assessing officer will take. So you need not have, assessing officer need not have to cancel registration in all cases. In some cases, without cancelling registration, only a part of the violation which has happened would be brought to tax instead of the entire amount. So that clarity has been provided. So I think this will go in a long way in reducing litigation in trust cases. So that is also another step for reducing litigation. Virtual digital asset is definitely one issue which definitely what Shahid Khan sir also said, that the very wide definition have been given. We accept that it is quite a wide definition, but the idea is that because this is an area where every month something is happening, some development is taking place. So we, because definition is a part of legislature and you can't change legislature every month. And if you change it every year also, then like Asim will say, 85 clauses are there, so many clauses. So you can't change them every year. So the idea is that have a wide definition, but the disadvantage of wide definition is that some of the normal assets can also get covered, which you don't want them to be there. So therefore, power has been taken by the government. Proposal has been made in the finance bill that legislature delegate the power to the government to take out any of the asset from that definition, so that we don't have to amend the law. So that power has been taken. But still, we are open to receiving, feedback on the definition. We know that, this definition is only an attempt by us, and it may not be an ideal attempt. So if there are suggestions, we will welcome that suggestion. But this VDA is one area, where we will need cooperation from other countries. And when we are talking about India-US cooperation, now that is one area where for cross-border taxation of virtual digital asset, there would be more cooperation needed between the two countries. And which was also referred to by Mr. Thomas, that there should be more flow of information between the two countries. And definitely such flow of information would help these initiatives. I remember when FEDCA was introduced by USA, that led to introduction of automatic exchange of information, which has been a very, very useful tool in the hand of tax administration all over the country. So such kind of cooperation, free flow of information have been really very useful in the past, and we are quite sure it will continue in future. On to the question that Shahid Khan sir said, that losses from one class to another class is not allowed to be set off, which is the way it is right now. But we do take the feedback, and we will discuss that what should be the ideal situation. One advantage of participating in these conferences is that we do get the feedback which we can discuss, and so that all stakeholders' views are considered before a final decision is taken. So when we are talking about this overall theme of the budget, that giving tax stability and administrative reform, one thing which we should also mention, that budget is not the only opportunity. It was also discussed earlier that even when we withdrew retrospective amendment, or when we our commerce minister had a meeting with the US Secretary of Trade, and 301 matter was resolved, equalization levy agreement was reached. So these initiatives are all the year around. It need not to be at the time of budget, but that message is clear, and that message is that government is providing tax stability, and therefore foreign investor should see India from that perspective, that there is continuity, tax certainty, and stability in India. So from that point of view, I think this budget is in the same direction, the direction which this government has taken since beginning, and we are quite hopeful that this will take not only tax collection to a always the highest tax GDP ratio, but it will also boost our Indian economy, generate growth, and create employment opportunity. Thank you very much.
Thank you very much, sir. You made a statement that reduction in tax rates is offset by increase in business activity and eventually increase in tax collections. Generally, you hear this kind of a statement from a business person or a tax professional like me. It's very heartening to hear this statement from a tax administrator and a tax collector. Sir, we have a couple of questions. First, of course, this was not the year to ask for, but surcharge and cess by definition. I think Administrator Mr. Kamlesh Vashni is on mute.
Yeah, now it's okay. Yes.
Yeah.
Okay.
So, sir, first of all, it's very heartening to hear that you also feel that reduction in tax rates will eventually lead to increase in business activity and increase in tax collections.
Yeah, thank you.
For
Thank
that.
you. Yeah.
Sir, of course, this was not the year to ask for. Surcharge and cess, by definition, are meant for a short period of time. to meet a specific objective. Is there a plan to do away with these in near future, or should industry embrace them for a relatively longer term?
See, it is not right for me to comment on this question because that's a completely the prerogative of the government. And see, so far as industry is concerned, it should not matter. I mean, whether it is in the form of tax or it is in the form of surcharge or cess. It is basically a matter between center and the state. And I am definitely not the right person to comment on that because what we view it as an, cess for a special purpose. Like in this case, cess is for health and education. And I think somebody observed that the allocation to health has gone down. So I think it needs to be seen from that perspective. That amount would come also from cess. That also goes to Consolidated Fund of India, and that also goes to states for implementing various schemes related to health and education. So these health and educations are still the area where these kind of assistance are needed, even at this point of time. So, I mean, this is totally up to the government at what point of time they want to continue this cess or they want to discontinue it.
Thank you, sir. So on cryptocurrencies, we all agree with you that the legislation will eventually evolve and the regime will develop over a period of time. But in context of the TDS on cryptocurrencies, I think that is one area where maybe that various stakeholders should provide you inputs, because that looks really a difficult task to implement, keeping in view the way the cryptocurrencies work today.
Yeah, absolutely. I mean, we are fully aware of this aspect. It is a new step which has been taken. It is uncharted area, how to tax crypto, how to deduct TDS, on crypto transactions. And therefore, power to remove difficulty is contained in the TDS provision. And we do intend to use that power to provide clarity to the taxpayer. Definitely, the effort is that we need to make it clear to the taxpayer to the extent possible so that there are minimum disputes.
So one related question on cryptocurrencies, while the intent is to implement it prospectively, the legislation which is being proposed in the budget, but I think there is a tax element even for the current year and the earlier years. And do you expect it to be left to the discretion of the assessing officers, or sir, will you be issuing certain guidance in terms of the current year and the earlier years as to how the taxation should proceed?
See, you correctly said that crypto is not a new tax. Even today it is taxable, but how income is to be calculated, at what tax rate it is, probably that is, subject to various fact patterns. Now, if, whether it is my capital asset or my business asset, it will depend on those facts. So I'm not sure whether, CBDT can clarify that that it is your capital asset or your business asset. It probably will depend on the fact of a particular case. So therefore, it will be really a difficult task if CBDT ventures into classifying such assets. Particularly for when now it will not be relevant after 31st March.
Sure. So, sir, basically it will be left to the discretion of the individuals to file their tax returns, declare it, and then maybe for the assessing officers to decide on the outcome of that.
Right.
Okay. Sir, you mentioned about tax technology, and we have seen that at many stages, both on the GST as well as direct taxes, I think the department is one step ahead. Can you give us more insight into what exactly is happening on the tax technology and usage of artificial intelligence in terms of go forward, so that we as chamber are also educated and we can share that view with our constituents as well?
See, exact technical aspect, I may not be aware. I'm not a technical man, but yes, I know to that extent that we receive information from various sources. Section 285 is there, through which we receive information. TDS provisions are there. So when taxpayer file TDS returns, we get information from there. So those informations are mined. Then there is an insight portal has also been developed by the income tax department, so that all your 360 profile is matched. At one, so let's say I enter Kamlesh Vashne on that insight portal. So all my information will come at one place. including my ancestors and my related parties, my related companies, and all my information, what transactions I have undertaken, which about that information we receive from various sources, all will get populated there. So now that will be available to the assessing officer. But as I said earlier, that before it gets available to the assessing officer, it will undergo e-verification scheme. So in e-verification scheme, it will be seen whether the tax return that Kamlesh Varshney has filed is in line with the information that is contained against his name. And if not, then a kind of a communication will be addressed to Kamlesh Varshney that we feel that your tax return is not proper, it is not reflecting these transactions. Then I will say that how it is reflecting those transactions. I will explain it to them. Or if I also feel that probably I have made a mistake, then I will try to update my tax return. So that is how the entire process will work.
So, sir, to paraphrase what you said, death and taxes are certain, and Indian taxman is aware of what you are doing right now.
Yes, that's right.
Right. Sir, the scope of AIS has been widened over a period of time. And this year, again, a lot of items have been covered. Is there a plan to increase more number of transactions or the variety of other transactions as well in that?
Yeah, so that is, an ongoing exercise. There are two ways through which, we widen and deepen the tax base. And that is, one is TDS and one is information, what you have just now referred to as AIS. So both are effective. TDS is more effective. If suppose you undertake a transaction and tax is deducted on that transaction, you become more attentive that I need to disclose this in my tax return. But if otherwise you undertake a transaction which gets reported to the income tax department, probably it doesn't come to your mind immediately. I mean, I'm not saying there are many honest taxpayers who do keep that in mind, but it doesn't come to your mind immediately that I need to account for that in my tax return. So TDS is more effective than this information, but TDS puts more compliance burden on the taxpayer. This puts less compliance burden on the taxpayer. So, government has to balance the two, in what situation, which one is more appropriate, whether without putting extra compliance burden, how can I get information or create a kind of a nudge in the mind of taxpayer to encourage voluntary compliance. So this is a fine balance which always happens every year. And then obviously when this fine balance is to be achieved, then what you view, your view may be different from my view, that whether in this situation TDS is more appropriate or information is more appropriate. But idea is that this is the objective, how it is decided.
So you mentioned about TDS. We did one study that there are roughly about 4 sections which contribute almost 80% to the TDS regime. Whereas on the statute book, we have more than 3 dozen sections. Sir, they all add to the tediousness and complexity and result in disputes and litigation. Our request would be to have a reconsideration, relook at the TDS provisions. Maybe some of the provisions could be rationalized and some could be deleted, which do not contribute to the revenue, because it is only adding to the complications, sir, today.
So once again, first I will say that what you are saying is perfectly valid. We should keep on reviewing whether, as I said earlier, whether TDS is more appropriate or information is more appropriate. And if TDS is more appropriate at this point of time, it probably 4 years later, scenario could be different, both for information and as well as for TDS. So to that extent, I agree that we should review this, whether we should shift from information to TDS or TDS to information, that we should keep on reviewing. But probably my view is that the amount of tax collection is not an important factor to decide. As I said earlier, the purpose is that TDS, when there is a TDS, it immediately gives a signal to you that you have to account for this transaction in your tax return. So maybe the tax deduction rate is only 0.5% or 0.1%, as against 10% in some other case where we are getting more tax in TDS. But that 0.5% may be serving its purpose without much tax collection. But your overall message is correct.
Sir, we completely agree with you. Sometimes tax collections are not the key criterion, but collecting information is. But our humble submission to you is, sir, with a lot of information flowing into the department through various sources, maybe certain provisions could be rationalized, not now, not immediately, but over a period of time.
Right, sure.
So you very well covered on the litigation aspect that there is clearly an intent, and we see it intent being implemented in terms of reducing the litigation, where it is in terms of increasing the limits of department filing and of appeals, or the changes which have been brought in this year. Sir, in terms of strengthening the alternate dispute resolution mechanism, for example, whether it's board for advanced rulings, is there a thought process to make it more independent? Because currently the representation will be only from the department. If it could be a more independent panel, I'm sure the businesses will be more forthcoming to get it resolved at first stage instead of getting into prolonged litigation.
Yeah, I think you have a very valid point on this. This is something which will always be discussed, and something for the future. Probably right now, this change happened only last year, but definitely, I mean, these are the points which will always be discussed within the government in future.
Sir, I have a long list of questions, but I will bother you with this last question before I start winding up. On the personal tax front, sir, we have two regimes right now: the older regime, under which certain exemption deductions are allowed, and the new regime, which is a simpliciter regime, and that's the intent going forward. Sir, we understand that probably still a lot of taxpayers are opting for the old regime right now. So maybe go forward, you may like to combine the two regimes with little incentive or a sweetener added so that everybody moves to the new regime voluntarily, rather than you only giving one option. So any thoughts on that?
See, first of all, I think we should consider a fact that the government, hands are tied on this issue, because 6 out of 6.3 crore individual tax return, 75% are below 5 lakh. That means not paying any taxes. So you can imagine, that probably this is one area where, if you try to give more concession at the lower end, it will further distort your tax structure. But your suggestion is right. The problem is that we cannot discontinue with one regime. For example, should we discontinue with the old regime, that we will not give you ATC, we will not give you ATD, something which is probably not right at this point of time. Because for some people, that is something which is essential. So that decision to combine the two is always a very risky proposition at this point of time. But yes, if something more benefit can be given to the new tax regime, so that people opt for new tax regime, that is definitely one area which I'm sure will be up for consideration in subsequent budget.
Thank you very much, sir. On behalf of IACC, all my panel members and all the participants, a heartfelt thank you for joining us and answering our all questions in a very candid manner. We have, sir, really gained. Thank you very much for joining us once again.
Thank you. Thank you, sir.
Thank you, sir. I think we all will agree that it was an interesting discussion on a very comprehensive budget, which lays out the roadmap for an inclusive all-round development. With this, let me invite Mr. Sunil Jain for a vote of thanks. Mr. Sunil Jain is a Regional Vice President, IACC, NIC, and Operational Partner, Energy Transition with SR Capital. Sunil ji, over to you.
Well, before I say thanks to others, I thanks Vikas. Firstly, probably we must thank our Finance Minister for giving a budget which was so forward-looking and which actually started off all these panel discussions and all these debates. Right. Having said that, I think so, Vikas, you have done a great job, and thank you so much for being a part of this session in moderating in such a professional manner, and you kept us engrossed with your questions. But not to mention that the questions were so pointed that you have actually enlightened everybody. And Mr. Kamlesh Vashni, he has actually answered all the questions so patiently. Thank you, Mr. Kamlesh, for being here with us. And we really appreciate spending time on this Indo-American Chamber of Commerce session on this budget analysis. We really believe that such sessions actually clear a lot of myths and doubts about the budget, and they are always seen in a positive sense, because all those people who are here, all our partners, all our people who joined this session will go back with a positive frame of mind after they hear your answers. So it's an important direction, and thank you so much for that. I must thank Thomas Carnegie for joining us from the US Embassy and giving his perspective about the Indo-US relationships and how US is viewing India as a country in terms of various sectors, and how this budget is important for both the countries. While I do agree, somewhere I heard in the discussion that budget should not be seen as the point of everything, and budget should be a normal thing which we do in a routine life also. You know, a housewife also makes a budget. We don't talk about it. It's a different matter. Thank you all. I must thank Mr. Shahid Khan, who gave us a perspective, and with his vast experience, I think so that insight was very, very, very valuable. I would fail to, in my duty, if I don't thank Mr. Raman Roy, our colleague in IOCC, who's always so enlightening, and the questions and answers he gives, it opens up your horizon so beautifully. Must thank my sponsors, without whom this would not have been possible. Thank you, Kocher and Company. Thank you, Grant Thornton. Thank you, all my sponsors, if I have not taken a name, for doing it so beautifully. And always, we all say that for success of any program, there are people behind the screen. And today we have a literally screen, but here the people are in front of the screen. They're on the screen, actually. And I must thank our IACC team for conducting this session so beautifully, arranging it flawlessly. Really appreciate all of you for spending time. Thank you so much.
Thank you.
Thank you.
Thank you.
Probably we are ending the session with this. Thank
Yes.
you, Note.
Thank you.
Thanks everyone for joining us.
Thank you.
Take care.
Thank you all.